This is Barry Zalma speaking for Claims School Incorporated's blog, Zalma on Insurance. Today we're going to speak about the red flags of insurance fraud that are indicators of insurance fraud and are investigative tools for the insurance industry. Suspicious claims have common attributes. Insurers and their anti-fraud organizations have collated the common attributes into lists of indicators of red flags of fraud. The lists were created as training aids and to be used to determine whether further investigation is required to determine if a claim is legitimate or false and fraudulent. Continually growing, these lists are known as the red flags or indicators of fraud lists. There are many different categories ranging from those associated with the claim itself or with insureds to indicators of specific types of fraud such as bodily injury fraud or arson for profit. If, when assessing a claim, 3 or more red flags of fraud are found, the need for further investigation should be considered and evaluated by the claims person, a supervisor, or the insurer's special investigative unit. The existence of red flags does not mean a fraud has occurred. Red flags are only a signal to the adjuster to investigate further so that the suspicion may be either removed or confirmed. It is not any single indicator that alerts an adjuster to the possibility of a fraudulent claim, but a combination of the red flag or red flags discovered coupled with the results of the thorough claims investigation. Although the existence of multiple red flags should trigger an investigation, failure to investigate has been held to be reasonable as long as there are no patent inaccuracies or actual knowledge of false representations. Some red flags of property fraud include more than one mortgage, late payments, a recent divorce, prior claims, multiple claims, problems affecting title to the property, overinsurance, an increase in insurance coverage right before the claim, recent cancellations of insurance held with prior insurers, liens, threats of foreclosure on the property, lawsuits, and recent job transfers, among other things. As the Nebraska Department of Insurance states in its booklet, Fraud Detection Hints, it is, quote, important to remember that the possible red flags indicate that there may be some evidence consistent with an insurance fraud scheme. Any 1 or 2 of these themselves may not raise your suspicions. However, when you have several of these hints, the red flags present, or a pattern begins to emerge, you should investigate further or forward your suspicion to the Insurance Fraud Prevention Division, the Fraud Division of Fraud Bureau of your state. Some red flags are common to claims, such as a claim shortly after the issuance of a policy, a claim shortly after the limits of the policy are increased. It's an insured's first insurance, shortly before the expiration of a policy, or within days of a notice of cancellation being served, or on a policy acquired from an agent far from the insured's home or business. There are also red flags connected with the insured or the claimant. Adjusters evaluate the manner in which the insured makes a claim. A few red flags that may raise suspicions include some of the following: when the insured or claimant retains or is represented by counsel on the day of the loss, does not want to retain counsel, note the contradiction, is represented by a public adjuster on the day of loss, wants a settlement approved quickly, does not want the claim to go to a supervisor, regional office, or claims committee for authority, is exceedingly cooperative and undemanding, is exceedingly demanding and threatens a bad faith suit from the date of first contact, again, notice the contradictions, they're both red flags, or demands a proof of loss form at the initial meeting, is familiar with insurance claims terminology, asks for the claims manager by name, is familiar with the adjuster's authority limits and wants to settle for a sum within those limits, handles all business in person, thus avoiding mail and potential prosecution for violation of federal mail fraud statutes, provides an address that is a post office box, a mail drop, or hotel, or reduces the demand for settlement when it's suggested by the insurer's adjuster that he or she file suit. The adjuster or investigator should also pay attention to the insured's or claimant's history and background, including their financial situation. Red flags also exist concerning just the insured, where the insured has lived at his current address less than 6 months. The insured has been with his current employer less than 6 months. The insured has a previous history of losses. The insured cancels scheduled appointments with the adjuster for statements and or examination under oath. The insured is employed with an insurer. The insured is unusually aggressive and pressures for a quick settlement. The insured does not have a telephone. The insured's telephone number is only a mobile cellular phone or a payphone in a bar. The insured is difficult to contact. The insured claims to be self-employed but is vague about the business and his responsibilities. The insured is very knowledgeable about claims processes and insurance terminology. The insured offers inducement, a bribe, for a quick settlement. The insured is unsolicited new walk-in business not referred by an existing policyholder to the agent. The insured's address is not consistent with his employment or income. The insured only gives a post office box as his address. The insured is unemployed or in a transient occupation. The insured seeks a copy of the policy before agreeing to insure. The insured insists on reading the policy before he agrees to buy it. The insured is vague about the loss. The insured's report of loss is inconsistent with the evidence. The insured has a selective memory. The insured has financial difficulties at the time of the loss. Sometimes there are dishonest insurers, and fraud by insurers and their officers can exist and is not necessarily limited to submission of falsified financial statements, misuse of company funds, insurance of otherwise unauthorized insurance policies, insurance plans not authorized by the State Department of Insurance, individuals not licensed to do the business of insurance in the state, or fraudulent group individual health plans. Some examples of fraud by insurers claimed under homeowners policies include insisting that the insured allow the insurer to generate the loss inventory after a covered loss, issuing policies with a declarations page showing limits that the insurer knows is higher than the actual cash value or replacement cost of the property, the risk of loss of which is insured, to take premium for greater risk than that actually taken, using economic coercion to force the claimant to use the preferred repair vendors, undercutting market rates to lure employers to acquire workers' compensation insurance while failing to properly maintain sufficient funds in reserve to cover claims, use of an unqualified or dishonest medical examiner to avoid payment of claims, use of unethical defense lawyers to avoid payments of claims, use of unethical private investigators or use of a legitimate special investigation unit's investigators who are instructed that their only purpose is to deny claims rather than an effort to avoid fraud. In my opinion, red flags are important, but they are not evidence. They are often contradictory. They are evidence that a fraud might be happening and require, when more than 3 or 4 red flags show up in an investigation, that it is time to refer the claim to the insurer's special investigation unit to determine if there exists admissible evidence that a fraud has been attempted. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. You will be advised, if you subscribe, about every blog posting, usually 5, sometimes 6 a week. And you can also subscribe to the videos on Rumble and YouTube, all of which are free. If you do, I'd appreciate it if you click on the like button on YouTube and the thumbs up button on Rumble. And I'd ask that you tell your friends and colleagues about the blog and the videos and let them subscribe as well. And if you're interested in further detail about insurance, insurance claims, insurance fraud, and insurance law, please consider, for a very small fee, subscribing to my Substack publication. Thank you for your attention.